a tremendous hello to the new year from Cannasure. Thanks everybody for participating today. We wanted to share that Cannasure's MGA continues to be the platform program here, and what we launched today, some of which whom have seen this, have already seen some of these programs. It's really an extension of what we're doing within our MGA program. So it's a complement to what we built within our flagship MGA, and we've added the products of excess casualty and excess property. But before we get there, wanted to reinforce the fact that the exciting parts of the Cannasure MGA is the fact that we continue to have an industry-leading $45 million per location of property to be deployed. And Kieran will speak to how the excess property program will play involved with our current MGA program, which is tricky, but we will share those details. And then, of course, the excess casualty program is really what's brand new and what's bringing us to you guys today. And that's exciting because that is inclusive to all in the industry. So over top our MGA program, as well as coming over top our competitors' programs. So it allows us to be inclusive. And isn't that really the word of 2023? Inclusiveness. With that, I would like to include Kieran O'Rourke, our underwriting manager and the architect of Cannasure's MGA program. Grace, can you flip the next slide, please? And you'll see that it's going to be that fast, guys. Kieran's going to jump in and grab a couple of really neat highlights on the programs that we're about to talk about. And then he's going to just turn it over to Grace and our audience as we watch for questions that'll come up through the Q&A. Please use the Q&A if you want to while we're talking, because it becomes memorialized there instead of in the chat. And then from a housekeeping standpoint, we are going to send out the couple of slides we have today, plus an updated one sheet, as we call it, that reflects these updated limits that we're bringing forth. With that, Kieran, please take it away.
All right, thank you, Jim. Appreciate that. Hello, everybody from sunny downtown Cleveland. That's actually not so sunny, cold and snowy. Hope it's warm and sunny where you are. Welcome to this webinar. On behalf of the entire Cannasure 180 team, we're grateful for everything you do out there for us. And thanks again for dropping in for a quick little update on some of our new capabilities and some that aren't exactly new, but we wanted to remind you of that. First up today is the excess casualty program. We're very excited to be launching this program. It is a new program here at Cannasure. It is unrelated to the carriers that we already have in-house. So new carrier, new capacity, new capabilities. And we think it's, it's a big deal to have something as unique as a $5 million layer available to attach to 5, 10, or 15. We think this is pretty much a first of its kind. And we're very happy to be plowing new ground with this program. So so we are open for business. We expect the phones to be ringing anytime soon. It's like the old PBS fundraiser, right? Just imagine a bank of phones behind me with people answering and taking your orders. We'll be sure to fill them. I think you're going to like some of the things that we're doing with this new program, and hope that you can find a need or a client of yours has a need that a $5 million additional layer of casualty will help them with their business. Okay, so once again, it's a $5 million layer that we are selling. A $5 million layer that attaches at either 5, 10, or 15. So, we don't know how many 20 million layers there are, or limits there are out there, but we feel that the sweet spot would be 5, 10, or 15. And this is true follow form coverage. Our goal here, I'll get to some of the underwriting considerations in a bit, is to, for the most part, mirror the controlling underlying insurance, or just plain underlying, as the case may be. The technical term is controlling underlying insurance, and we will have the ability to mix and match controlling underlying policies. With that, I mean, for instance, our main program that is backed by TOPA, that many of you know, has an occurrence GL and a claims made product liability. And this particular excess program will have the ability to go over both at the same time. So when I say mixing and matching underlying policies, this is flexible enough that it will sit over top of both and do the job that's needed. I guess this fourth bullet point, maybe I should have put this first and, I don't know, colored it yellow or something like that, because there is no special or additional application needed. And I understand that most of you, the retailers and wholesalers out there, I know you love doing applications. I know that's your main deal, to fill out applications, especially at renewal. So apologies, but the only thing I'm going to need here is the application that supported or developed the underlying policies. So, for instance, since this is going to go over anybody's underlying, let's say that CanGen, Quad Score, what have you, is the underlying policy. That application that was used to support the underlying policy is all I'm going to need as far as applications go. So there is no special, there is no additional, there's no supplemental. Where's the application that was used for the underlying? I'll take that. The most recent, of course. We're expecting this to be done at the same renewal date as everything else for the most part, although not necessary for the most part. So it should be handy. And the other thing we're going to need is the policy or the proposal, something that would enable us to see the limits, the premium, the rating basis, and what the forms are: claims made, occurrence, what have you. So everything that we would need to develop the underwriting and then a price is something that you've already got. And we think that that's a key sales point. And it speaks to the fact that we didn't roll this program out to not write business. We want to write business in this program. So making the process as easy as possible was a key feature to what it is that we set out to do. So once again, we're deploying $5 million. We're attaching at 5, 10, or 15. It's a follow form for the most part. No broader coverage, if you will. And we're able to go over occurrence and claims made at the same time. This is not a program that is related to the other programs here at Cannasure. And so we intend to be deploying this program over our existing program with no problem of maxing out on limits or anything like that. So very proud of that we were able to bring in a new carrier to support this program. So some underwriting. Oh, and by the way, the carrier is A-8. So in case you're keeping track of that, underwriting considerations. Then I mentioned that there's this is designed to be true follow form. No broader coverage than the underlying, so it is an excess. It is not an umbrella. If somebody calls it an umbrella, I'll let you go the first time, but you're going to have to call it excess the next time. Kidding with that, of course. I'll give you 2 tries. So along with the follow form, there is no drop down provision, and by that I mean if the underlying were to let's say cancel for non-payment of premium or what have you. That $5 or $10 or $15 million retained limit remains a retained limit, whether there's a policy under there or not. So the limits of this program do not drop down in the event of a cancellation or something like that. If we underwrite an account and it's attaching at 5, our limits will always be $5 million away from $1 on a claims payment. We have also, I meant to say something about the concurrent dates. This program is flexible enough that we are able to handle some non-concurrent dates, although we would greatly prefer to have concurrency. If there is a need to match up dates or whatever, then a short-term policy can be issued to do that and then hit that annual cycle afterwards. So we wanted to mention that it continues to have some good flexibility. This was designed to have a retro date of inception. That was, kind of part of the focus that we had to bring something to the market that was saleable from a premium standpoint and meaningful from a limit standpoint. As everybody knows, there are always some considerations to be made to keep the premium something that somebody will want to buy and balance that against the available coverages and features and terms and conditions. So retro will be inception on all of these policies. Also, it's worth mentioning that things like hired and unowned or stopgap, employer's liability, EPLI, this program was not developed. It doesn't, the rates don't contemplate any of those coverages. So a lot of these ancillary things that you'll see emanating from the GL and some from the product liability are not going to be included on this excess program. So to begin with, we wanted to keep it a little bit pure. We wanted to be responsible with the capacity we were provided. And so we were going out with the retro inception and the a fair mix of typical exclusions. So we, again, to sort of wrap it up, our goal here is to not only introduce this program to the marketplace, but also to sell a few policies for sure. So, I think that everybody gets it, that these are a little bit trying times in the industry. And, some of these operators are going through maybe a correction of sorts, whether it's, with their own business or just dealing with the market realities. But, there's, that old saying that goes, if you think the cost of insurance is high, try going without it. And so what we want to bring is a reasonable premium to an additional $5 million that, particular clients that have a sales level and a perhaps in the MSO range that need it. So this is going to be, we feel, is competitively priced at the same time. All right, so I'm going to move on to the next topic.
Let's stay on excess casualty for a second, because I know when I've spoken to the program in the marketplace, we've had a couple of inquiries to get a $2 million limit, excess of an underlying $5 million limit. Wanted to see if you could address that.
Yeah, the any kind of beginning is always a very delicate time, and so you line up your capacity, you line up your underwriting guidelines, you line up your rates, and you decide to go with what you've planned. So I say that to say that down the road a piece, there may be plenty of opportunities to broaden the offering to allow for something less than 5 million to attach at either 5, 10, or 15 for the immediate future. What we're going to do is we're going to stick with the 5 million, and we're going to certainly keep our ears open, but we want to give the original concept a good start.
Thanks. And then one other question I've heard is, what coverages do we assume or anticipate the program to go over top? Just product liability and premise liability, or is there an extension over EL for workers' compensation, EPL, D&O, auto liability? So I know those are some of the questions that I've seen, and
Yeah.
in fact, Mr. Eng asked.
Yeah, the current version, the inaugural voyage, if you will, does not include any coverage for the ancillary items that you mentioned, whether it be stopgap, workers or employers liability, EPLI, any of the D&Os, hard non-owned. None of those are included in the 5 million. And again, one of the things that we have promised ourselves is we would keep a very open ear to the market and see how things are going. But right now, everything is pretty well matched up. When I say that, I mean the forms, the underwriting guidelines, the rates to be somewhat pure in the offering as far as simply BI and PD over the products and premises GL.
Well, just figured through some anticipatory questions right there that I figured you could answer live. Back to you, sir.
All right. Okay, in keeping with the speed of this webinar, so we can get some Q&A in, if you'd move to the next slide, we talk a little bit about our excess property capabilities. This isn't necessarily a new quote unquote program in the true sense of the word. This is our current program that we've offered here for 5 years plus, backed by Topa Dorchester. This is a feature, if you will, of the program where part of our property capabilities will be to participate in what is commonly referred to as a tower of coverage, and we have a lot of property coverage to deploy, and it doesn't all have to be primary. Although we do love primary deals, right? We'll do the first 45 on some mega limit, some mega location. But we will also, if the opportunities present themselves, we will do 10x of 20, we'll do 15x of 30, we'll probably do 10x of 10. We want to look at as many of these excess property capabilities, or property opportunities, I should say, as we can. Now, the outer limit, doing a $45 million limit on an excess basis would have to be a let's sit down and talk about it scenario. Our sweet spot would be, as you can see on the slide, doing a 10x of 20 or a 15x of 30 or something like that. That is not the extent of it. That's the sweet spot. As always, production underwriters we always want you to call and let us vote on it. We don't mind calls that hey, what about this? It's a little bit different than what I saw on your slide last week. I would much rather have you call me and discuss it rather than assume that it's not a go. What we want to purvey here is in a short webinar setting, what our sweet spot is, what we would like to see. But what we really want to do is we want to sell some coverage. So, the $20 million is a good average. That's a good comfort spot for us. There are situations where 30 might make sense. If there is a need for $30 million above somebody's primary limit, I expect a call. So underwriting considerations, really, if you know our appetite, on an ongoing basis with this program, there is really nothing from an underwriting standpoint that is substantially different. We are looking for, average to great risks out there, and we would look at these things with much the same eye as we look at everything else. One of the things we've all come to know about this space is that these operators are they run some pretty good operations, and even with the advent of the lighting caused fires and what have you, there's plenty more operations that have not had lighting problems than have. So we believe in this space, and we want to participate to get these guys covered in the right way. So our underwriting considerations don't really change too much. What you know of us already is what you'll know when it comes to this excess property capability. So everybody knows of an account that has a layer or two at the top uncovered. And even if it's the third position, even if there's a primary, a secondary, and then another 10 that needs covered, we would expect a phone call. We would expect an inquiry as to what our capabilities might be or our interest might be on something like that. So I guess to sum up before the Q&A here at 2:22 into the webinar, we are open for business on two different excess capabilities, among others. The first one being our brand new program with a brand new carrier and a brand new setup for excess casualty. $5 million up for sale, and we'll attach at 5, 10, or 15. The other one is the excess property capabilities that we have done in the past and we want to do more of. And that is to participate in some kind of a property coverage tower. We would look to maybe 20 or more that needs to fill out a line or something like that. So last thing I'll say is we're still open for business for that primary deal, that up to $45 million. And don't forget that either. We're certainly equally interested in doing those as well. With that, with a few minutes left here, I'm hoping that there's some comments in the chat box, or perhaps if you've got my email, you can send me those as well. What do you got?
And we've answered a couple questions live already in our discussions. And one of the things that we want to do post-webinar today is share our new one sheet, our exclusive cannabis and hemp MGA program that has these updated limits and updated coverage opportunities. So has a chance to show what we're doing out in the marketplace with all of our trading partners, both retail and wholesale. We anticipate that our wholesale partners will be nearly exclusive in our reach for the excess casualty program. We have a couple of big trading partners that have existing MSOs that will have a chance to run into the retail side of our program. Question, Kieran, is the excess liability policy auditable?
The excess casualty is. There is an audit form. It's the same one we use on our current policies right now.
Do we have any concerns writing over top any existing competitors in the marketplace today? And that would include both MGA programs as well as standard carriers, the Admirals and James Rivers of the world.
I don't. I think we all know each other pretty well. The sandbox is not that big. So clearly, that's as of today. There may be a new entrant into the marketplace that is heretofore unknown and would need to be vetted. But we had a look at just everybody that's out there doing this, and we feel good about writing over any of you. It's I like to think that it's a pretty collegial group, and we know each other pretty well. And that's another great thing about this program is that we'll sit on top of any of the main carriers that are doing business right now and programs in this space.
Would we have an issue with a carrier coming in at B+6, A-6? Because there's going to be some new entrants coming up here for the next couple of months.
Yeah, as far as new entrants go, I think if there is a rating deficiency, we will probably identify that right away. That letter grade that it says a lot doesn't quite say everything. So I would like to maybe hedge a little bit on saying no, definitely not B+, but probably not.
Gotcha. Mr. Needy coming up with a question about, are we open to writing hemp risks, and if so, in non-cannabis states?
Yeah. This this is a cannabis and hemp writing agency. The MGA, the program side of the house, is interested in hemp as well.
So where we're open for business, like the state of Texas is an example, where we have the program filed, but there's no cannabis there live, hemp is available as an example.
It's my belief as an underwriter that there are good risks in all states.
Love that question. I love that answer, excuse me. Next question is a Delta 8 question. Very interesting question. How would you like to answer Delta 8, Kieran?
Well, of course, I'll answer that by saying that I'm old enough to remember a car called the Delta 88. And every time I hear Delta 8, I cannot not think of that Oldsmobile. So, but you know, I digress. Look, there is going to be the excluded substances that's on every form. If the underlying though has coverage for Delta 8, we will probably ask some underwriting questions about how much.
Okay, because anecdotally, great question, Michelle. Admiral is the writer of Delta 8 right now, so they're purposefully pursuing Delta 8 product liability cover. So the question then therefore is, would we want to follow Admiral in that endeavor?
Yeah, I mean, I'm gonna withhold total judgment on that because I haven't seen their form in front of me for a while. So how and what, and this is a follow form product. It's what's going on that first layer. How are they doing it? Why are they doing it? That kind of thing. We again, as always, we want to underwrite. We want to be able to underwrite with this program and all programs.
Gotcha. So I'll put a comment to the audience. I will contact Admiral today and get their form, so we have the opportunity to read their coverages, understanding what the offering is, so then we can react to that. Next question comes up on outdoor crop, which I will grab. We continue to offer a parametric crop offering in the marketplace through some trading partners, some London brokers, and it's been a program that's had some success when there's been some financial responsibility or collateral required by the lending community. There's been a few hemp and cannabis companies that have felt the need to want to provide coverage for their outdoor crop. Would give you an estimate of premium that you're looking at between 2.5% and 5% of your limits as the premium, subject to a $60,000 minimum premium. So you're looking at a couple $1 million of coverage to make sure that you're breaking the minimum premium. But it is an existing program that is viable, and it's just a matter of, does the risk that you have in front of you fit? So happy to see any outdoor crop opportunities, happy to share to the anonymous attendee sharing that question. You can hit me up at jmackerline@cannasure.com to put a specific question in front of me. I can send you some additional program information on behalf of the outdoor crop program. Nick has come in. With Admiral, would the excess sit over the bud tender professional liability that is included? Or would that have a similar answer as the other ancillary lines? Great question, Nick.
Does that liability limit?
Here, we have a $50,000 sub-limit in our policy. How does an excess policy work over top that?
Well, if the coverage is sub-limited and it has no chance of piercing the 5 million or 10 million attachment point, then it's moot.
Point. So that would be another need to look at Admiral's form and find out if they're also sub-limiting bud tender professional. But if Admiral's offering a $5 million bud tender professional liability limit, would we go 5x to 5 over Admiral if that was their underlying?
Yeah. The current our current underwriting guidelines don't allow that.
Okay. All right. Well, we are hitting our 30 minutes, folks. Answered a number of questions. Most everyone here has my contact information. And Grace, I'm not sure if it's on the next slide or not, just in case. But again, jmackerline@cannasure.com, or there you go, info@cannasure.com. That works just as well. If you want to send our team any questions that we didn't have a chance to do live right now, but we just wanted to make sure we were in and out quickly to announce these new programs. And we look forward to your continuing support. You guys have been absolutely fantastic partners